How's it going, everybody? Welcome back to Money and Life TV. My name is Mike the CPA, and in today's video we're going to cover strategies to help you immediately begin to save on your taxes throughout your lifetime. This is the first video in this series, and it's going to be very basic. The information I'm going to present here, it's going to start off very basic, and then over time, over the weeks and months as I produce more videos around this series, I'll get a little bit more detailed, a little bit more complex of ways you can minimize your taxes. I have about like 5 or 6 tax saving tips and all for you guys, so we're going to start there, and like I said, over time we'll produce more and more videos in this series. As we talk about these tax saving tips and strategies and techniques and things like that, what you're going to come to realize is that this is not just some strategy you implement once or twice. This is really geared towards shifting your lifestyle, living your life a certain way so that as you live your life, you can minimize your taxes throughout it. Think of this as part 1 of a tax diet type of series. The first way to minimize your taxes throughout the rest of your life is to actually take time to do legitimate tax planning. The foundation of saving money on your taxes, no matter how simple or how complex your taxes may be, begins with tax planning and forming a strategy. Most people would not consider this a tip because they simply do not understand the overwhelming importance of operating from a plan or strategy for their taxes. From doing taxes now and accounting for over 7 years in the real world full-time, I can tell you that tax planning is probably the #1 tax saving tip I can give people. Let me repeat that just in case you guys didn't hear me. This is by far, tax planning is the #1 tax saving tip or secret of the rich. When it comes to taxes, if you think about very wealthy individuals, they do tax planning. They have a plan for their taxes. But when you look over at the poor and middle class, they simply do not. They don't think it's that important. They don't think it's a big deal. But it adds up. Even if you have a very simple tax return, the more you can minimize taxes throughout the course of your life, the more wealth you'll accumulate in the end, and the more that you'll be able to pass on to your family and to future generations. So when it comes to tax planning and thinking about doing tax planning, here are some of the things I want you guys thinking about. 1, what do I expect my total income to be by the end of the year? 2, how does the way you make a living impact your taxes? 3, how does the way in which you invest affect your taxes? 4, how do I minimize my taxes in retirement? 5, think about how when you sell your home, your investments, and other types of assets, think about how that affects your taxes. When you think of expenses, I want you thinking about how they affect your taxes. Now, for those of you who've done tax planning or know what I'm talking about, the best time to do it is actually at the beginning of the year. The worst time to do it is towards the end, because by then you have very little time left to strategically change your income, your expenses, and things like that. So the best time to do tax planning is typically around the first quarter of every year. And obviously you can revisit those final numbers as the end of the year draws nearer. One of the simplest ways that I think people can start to look at tax planning or just get a better feel for where their taxes may be is if you guys go on the irs.gov website, there's that W-4 withholdings calculator. Well, you can drop in your projected income numbers for the year, your filing status, and all that, and it will spit out what it's going to think you're going to owe in taxes in total for the whole year. And if you don't know, I have an entire video that walks you through step by step of how to do that using the IRS W-4 calculator. And I also have a video that covers just a tax projection worksheet that I use to help my wife and I plan our own taxes. I'll link both of those videos up in the description section of this video and down in the comment section. But overall, guys, when it comes to tax planning, I cannot stress the importance of thinking long-term and how you can strategically impact your taxes. Think about the professionals, the rich, those who are doing very well financially. I can tell you they have a plan for their finances, they have a plan for their investments, and they have a plan for their taxes. And I think you should do the same regardless of what level of wealth or income you're at currently. And tip number 2, I have a tax saving strategy that's gonna be very interconnected with other things you do, and you're about to see why. This is gonna sound really strange at first, but the first way most people can actually begin to reduce their taxes is actually by paying off most types of their debt. What the heck do I mean? Let me explain. Debt is a good example of how your finances can impact your taxes. Now, most debt, like credit card debt, auto loan debt, and things like that, generally that is not tax deductible by any shape or form, unless you're doing it inside of a business. But for most people, they aren't business owners and they have all this consumer debt, auto loan debt, and medical debt, home interest debt, mortgage debt, all of that. Well, most of it's really not too deductible anymore. It's not very much deductible, and it's usually not gonna save you on your taxes. And debt is a perfect example of how your finances can impact your taxes. All these things up here, why I have these canvases, is because all these things interconnect with one another. You're investing, your finances, and taxes, and it eventually affects how you live your life. When a person has a lot of debt, they need additional income in order to service their debt payments. Now, generally, the more income we make, the more taxes we have to pay.
Oh, no wonder I feel like all my money goes to debt and taxes.
So now we're about to transition over to why paying off your debt can be a good thing. But the most obvious reason is just paying off debt. You're no longer paying interest, and it's gonna free up your cash flow for what we're about to talk next. Now we're gonna talk about retirement and investing and how that can minimize your taxes. Many of you know there's ways to invest for retirement and save on taxes at the same time. This is one of the most obvious and easiest ways to reduce your income taxes. Now imagine a person who is paying $1,000 a month on just paying debt payments. Then one day they finally become debt-free and no longer have to service that or debt. So now they have $1,000 of additional cash flow each month to their disposal. So now what they can do to minimize their taxes, one of the most obvious things they can do is they take that $1,000 a month, and because they're not used to having it anyways, and they begin to contribute that money to their 401k as an example. Let's assume their income tax rate is 22%. By investing $1,000 a month, their taxable income is automatically reduced by $1,000 a month. So within a 401k, when you invest in it, you're deferring when you pay tax on that money, which is usually for most people well far out into the future. And so your overall taxable income gets reduced by how much you contribute in total to your retirement plan each year. So if you think about it, by deferring $1,000 a month, by contributing that money to their 401k, they will begin to defer $222 a month in income taxes if their tax rate was 22%. And at the same time, they're actually able to save for retirement, which is a double win. If you now think about not just federal taxes, but state income taxes as well. So if you live in an income tax state such as New York, California, for example, when you invest in your 401k, you also are deferring when you pay state income tax as well. So there's a huge tax rate savings right off the bat, and you can take out that money later on down the road when you're ready to retire. I'm not saying you should immediately max out your 401k, but depending upon your financial situation, you should at least consider how much per month you can afford to contribute and still maintain your standard of living and stay out of debt at the same time. I'm not saying you just go out and maximize your 401k. I'm not saying that at all, but because you want to take everything into consideration, your finances, your taxes, staying out of debt. So I don't want you contributing so much to your 401k that you're gonna put yourself into debt, because I don't think it's worth it to do that. I hope you guys are able to see from that example how your debt actually affects your taxes, because if you had no debt, you would have free cash flow that you can then invest in a retirement account or other investments and defer your income taxes. So it's another reason to get out of debt and stay out of debt. And number 4, we're talking about investing in a Roth IRA or a traditional IRA. And investing in a Roth IRA won't save you income tax today, but can save you from paying income taxes in the future when taxes might be much higher. If you are in a high income tax bracket and you are nearing retirement, contributing to a traditional IRA might make more sense than a Roth, because you can start to receive an immediate tax deferral of up to $5,500 per year. Starting in 2019, that goes up to $6,000 per year if you're under the age of 50, and that's per spouse. So if you're married, each person can do that. This means a married couple could easily reduce their taxable income by $11,000 per year. A person over the age of 50 can contribute even more than that. Number 5, let's talk about taxes and medical expenses. One of the best and easiest ways you can save money on taxes and your medical expenses, in a sense, is contribute to a health savings account. Now, personally, I love health savings accounts. To qualify for this, you have to be enrolled in a high deductible healthcare plan. These plans are a fantastic way for us to save on taxes and build up a nice savings account for future medical expenses. The money in the HSA can even be invested to help you grow your medical savings account even faster. So we just covered 5 ways for you to start immediately beginning to minimize your taxes each year and throughout the course of your life by doing these certain things. I know the strategies were very basic, but they're intended to be basic to help the average person. And these videos will get more and more complex and different tips as time goes on. Now I'm going to show you just real quickly a chart on screen, and I just want to show you, just by implementing these 5 strategies that we discussed in this video, of how much tax you can defer just by implementing these strategies. You can see for a single individual under the age of 50, if you use every strategy we discussed in this video, you can defer up to $27,450. If you're married and under the age of 50, if you use every strategy we just discussed, you can defer up to $54,900 of your taxable income. So basically you're saying, well, this is my income, but because I did these things, this amount of money over here is not subject to income taxes until a future date. As I wrap up this video, I want to caution you on becoming too tax focused. What do I mean by that? Well, obviously it's great to save money on your taxes, right? But everything else is interconnected. Your finances and investing and everything else is intertwined in that. So what I'm trying to convey here is to be practical about it. What I would hate to see somebody do is try to maximize out their 401k, their retirement accounts, if they can't truly afford to do it, and sabotage their finances. If you can't afford to max out your retirement accounts, your Roth IRAs or whatever, then don't do it. Don't sabotage your finances in one area to offset it in another. I don't think it's a good idea, and I don't think you're gonna benefit from that. But just see what's practical based on your income, on your budget, your monthly expenses, etc., and see what you can do to save money on tax, invest for retirement, and get out of debt and stay out of debt as time goes on, as your income goes up, and then you can allocate more and more money to these retirement accounts or investment accounts. But if you can do it, if you can save money on taxes and do these things because you have a good income, because you have very low expenses and no debt, then by all means, I totally recommend doing it, because it's gonna help you save up a significant amount of money for your retirement and keep more money in your pocket at the same time. All right, ladies and gentlemen, if you liked the video, please make sure to drop a like before you leave. Share this information with a friend, especially somebody who's looking to save on taxes and trying to learn how to minimize their taxes. I would really appreciate it if you guys let me know if you want to see more videos in this area about how to minimize your taxes. And I currently do have a video already about how to minimize your Social Security taxes, which I'll link below. So lots of videos are going to be linked down in the description section and the comment section below. Well, thanks everybody for being here. I know it takes time out of your day to learn this stuff and to watch my videos, so I really do appreciate you taking time to be here with me. I feel really honored. If you're brand new to the channel, if you don't want to miss any of our future uploads, make sure to hit the red subscribe button down below and hit that little bell notification icon. That will give you notification every time I release a new video. I usually release a new video about once per week on finances, investing, and taxes, because our goal here on Money in Life TV is to help you become fiscally fit. All right, guys, take care. I love you all. Thanks for all the support. I'll see you in the next one. Live life uncaged. Peace.